Investors forsake diversification and chase hot returns. Before, used to be, Japan was hot, technology was hot, gold was hot, oil was hot, real estate was hot for a while, stocks can get hot, commodities, China was hot for a while, then it came crashing down. And the latest one, cryptocurrency. This guy says Bitcoin is headed to $100,000 in 2018, and I personally don't know if it's going to 100,000 or a million, or if it's going back down to zero, and it's going to be the RCA of cryptocurrency, because there's no RCA TVs anymore. Who knows what it's going to do? This guy says turn $20 bill into a massive fortune. Bitcoin is going nuclear. So for $79, he'll show you how. So instinctively, I just react like this. I say, why does he need my $79 if he can turn $20 into a massive fortune? Makes no sense. And this guy, thanks to a special event on February 19th, 2018. Now, for the record, it's March 3rd, 2018. Today? I get that right? Thanks to a special event on February 19th, 2018, one single Bitcoin in your portfolio could soon make you a millionaire. In fact, if you run the numbers, you'll see that Bitcoin 1 million is actually a mathematical certainty. I got that email in December, so I saved it, put it in the last class, and so since February 19th came by, it's gone. I went back to the email, clicked on it, whole new marketing scheme, still not Bitcoin, but cryptocurrency in general, and he stripped that date out of all his marketing materials. So the crypto plunge, when we sent out our crypto Bitcoin newsletter in December, it was right around 19,300. Again, I had no idea whether it was going to 100,000 or down to zero, but it came crashing down on February 5th. It was down to 6,900, a 64% decline, like that.
John, I thought he was a nice guy and he was going to show us how to make all kinds of money.
Yeah, I know.
You did.
Now, it's gone back up to 10, 5, 11, somewhere in that neighborhood. It's so volatile. I don't look at it. You can't look at it minute by minute without it being up 500 or 1,000. And so it's had like a 30, 40% increase off the bottom. But what's it going to do from there? Who knows? It's pure speculation, pure gambling.
Bitcoin is a bubble.
Maybe Bitcoin is a kind of a bubble.
A dangerous speculative bubble.
That might actually be true. This is Bitcoin's multiple price rise over the past 3 years. And this is 8 other famous asset bubbles 3 years before they peaked and burst. Bitcoin is creeping right up to perhaps the most famous bubble of all, Tulip Mania. And to be fair, it does have all the big signs of a bubble. The rapid pace of movements, a whole lot of speculation without sufficient understanding of the risks, and people who wouldn't otherwise invest are looking to get their skin in the Bitcoin game.
Yep. Everybody wanted in December. When your hairdresser wants to buy it, might be a warning flag. Might be a warning flag. Greater fool theory. A price can be justified by a rational buyer under the belief that a party is willing to pay even a higher price. In other words, one may pay a price that seems foolishly high because one may rationally have the expectation that an item can be resold to a greater fool later. So when you have these bubbles, understand that a very tiny few people make a killing on these bubbles. A vast majority of the people get left holding the bag. Nobody thinks they're going to be the one holding the bag, but most of the people get left holding the bag. So doing something dumb and hoping something else is dumber. So there's a lot of these examples throughout history. I'll just show you a few. But the tulip bubble was one of them. In the 1600s, the Dutch were paying astronomical prices for tulip bulbs. And everybody wanted to buy tulip bulbs, and the price went through the roof. And then all of a sudden one day it came crashing down, ruined lives all over the place. And then of course we had the gold run up, and then it came crashing down. We had a lot of people that wanted to buy gold, not down here, but here. Now understand, in our diversified portfolios, we're going to have the gold miners and all the jewelry people and stuff like that, so we participate in some of that, but we don't load up on gold just because it's going to the moon, or people think it's going to the moon. And this was the oil price bubble, when it was approaching $140 a barrel, and then we got Goldman Sachs coming on saying it's going to 200, and then we had other people, it's going to 300, 400. I think I remember seeing articles, one guy says it's going to 500 a barrel. Saw several people say it's never ever going back below 100 again, ever. We've seen that, it's history. It's been around, below 100 for quite some time now, but it's around 60 today, 60, 65 in that area. Came crashing down. And this is Bitcoin over the NASDAQ bubble. And the NASDAQ bubble, after its run up, crashed about 70% right there. And look what Bitcoin did. Who knows what's going to happen in the future? All these bubbles have the same pattern. The problem is we don't know how long they're going to last. Some last several years, some last just a few months. We don't know, but they have this familiar pattern. And if we could, guess this pattern, you could become very rich, but no one can guess this pattern, but they do follow this pattern. You have the takeoff and the media attention. You got enthusiasm, and this is where everybody starts buying it. The greed and the delusion. It's a new paradigm. It's never going down. It's always going to go up. And then it starts to go down. You have a little bit of denial, and then your fear, capitulation, and then total despair. Stealth phase, awareness phase, mania phase, and the blow-off phase. Every single one of them. So here's a guy talking about the greater fool theory, and he's relating it to stocks, but you can relate it to anything: stocks, oil, gold, cryptocurrency, it doesn't matter.
But you're probably not really owning the business because you really like the business and are prepared to own it forever, which actually everything we own we really do like, and we are prepared to own it forever. You're owning these because you think you can sell it to somebody else at a higher price later on, which is colloquially known in the industry as greater fool theory. You know you're a fool in what you're playing, but you're hoping somebody even more stupid comes along in a minute and gives you an even bigger price for it. Now, to illustrate that particular problem in life, we've got a clip, and it's a clip of how the Chinese army trains people to cope with the fusing on grenades and explosive devices. Now, bearing in mind that it's the largest employer in the world, the People's Liberation Army doesn't mind losing the odd recruit with that particular technique of training, I would imagine. But you might like to think twice before you actually do that sort of thing, because when you're owning one of these companies where you're not entirely sure what it does, and you're even less certain what the so-called business model is in terms of profitability and cash flows, and you're pretty certain that you've paid too much of it, you are, as an investor, in my view, somewhere around the guy around about number 3 on the countdown in Chinese there, because the idea that you're number 1 is silly. I mean, you know you're not number 1. You know that various people have passed it to you with the same thought in mind.
Yeah, exactly. So when you see these speculative bubbles where these asset classes have big run-ups, and you want to start buying it after the big run-up, you're not the number 1 guy. You might be the one that's getting the bomb and it's going to blow up on you. So you don't know. You don't know. Mania needs maniacs. Problem is, mania can go on for longer than anybody expects and can also end very, very abruptly. So Mark Twain said this: there are 2 times in a man's life when he should not speculate: when he can't afford it and when he can. I believe that.